Wondering whether it's better to be self-employed or employed from a tax point of view? Well, watch on. As a business accountant, my team and I spend all day long helping business owners on their journey, and of course advising around the right kind of structure and the pros and cons of being self-employed or in business for yourself is a key topic for discussion nearly always. And then I realised we hadn't actually done a video on this, so I thought it'd be good to come on and talk to you about it. So again, these videos are all designed for UK small business owners. I'm particularly talking about the self-employed individual in this one. Now, I will sort of mention limited companies on occasion in the video, but the actual advantages, we're talking about self-employment. Now, the government and certain things like mortgage advisors can confuse that terminology, so sometimes they'll use this word self-employed sort of interchangeably with somebody who's a limited company owner. But I'm talking from a tax point of view, self-employed, there's no limited company in here. You could also include partnerships, a non-limited partnership to this as well. So that's what we're going to be talking about. Now, before I get into it, if you like these type of videos, make sure to click the bell and the subscribe button to get notified whenever we release more videos just like this one. Now, again, we're talking about the tax benefits, not the obvious downsides that can come with self-employment generally. We all know the pains of, trying to build your business, ups and downs of incomes, inconsistent income, lack of pension, holiday pay, all the rest of it that goes with it. It's a kind of a thankless task, but then for many people, they do love the journey. I know I'm one of those. You take the rough with the smooth, and that's how it's always been. But yeah, that's why it's not for everybody, and not that many businesses make it to the 5-year point. Only about half of small businesses actually make it there because it's really tough to make it work. And we've got loads of videos on the channel talking about those other topics to help you get there. But this one is mainly I wanted to highlight some of the tax benefits and some of the other things you might not have necessarily pictured. And this was a conversation I had with a client the other day, and it sort of spurned this conversation back on. So the first one is tax rates. So the time recording this video in 2024, the government, although it's just changed in the UK, the previous government had announced quite severe national insurance cuts, and that's a real benefit. It makes it about 2% cheaper for you as a self-employed person at the time of recording versus an employed person. And that's great, and there's no loss of benefits to that. So that's a real plus sign, and that was a real positive piece of news for all of our self-employed clients. So that's the first one, is the tax rates. If you count national insurance as a tax, I think most people feel like it is, technicalities aside, then that's great. But for me, when we're talking about tax, one of the biggest benefits is the fact that you're actually paying for some stuff before the tax has come off. So if you imagine, as an employed person, you're going to go through all the various deductions. So you'll pay as you pay for your salary, and then they're going to deduct tax, national insurance, probably student loan, maybe you owe some child maintenance or something. They're going to take it all off of you, and then at the end of it, you're going to get what you're going to get. And then you're going to go pay your phone bill. You're going to go pay for your car. You're going to go pay for some of these other things. You're going to pay for the pens that you need to write around the house. Whereas the self-employed owner, sometimes some of those things that you may use personally can have some sort of tax deduction. And we've done lots of videos on tax deductions, and there's this idea that it needs to be wholly and exclusively for the use of your business. But sometimes those minor benefits are still there. So for example, you might deduct some of your mobile costs as a self-employed person, but the mobile's still there for you to use. You're still gonna bring that overall tax sort of burden down. And the same with your motor. You might claim some motor costs for some business mileage for temporary journeys that you're doing, but again, that's helping against the running costs of the car. And these things all come off your profits before you're taxed. So if you imagine it in that employed sense, it'd be like things getting taken off before your taxation's applied. And it really does make a massive difference on your kind of overall net pay. If you did that when you're employed and you took off all these things that tax deductions before they calculated your employed pay, you'd have more money at the bottom. And that's what we're talking about. So from a self-employed sense, all these things you could possibly get a tax deduction for is big, and it does have some benefits to it. So from a tax efficiency point of view, that's a definite benefit. Now, on top of that, you are in some control of how you're taxed and when you're taxed. And by how, I mean you can set the structure up. So you might choose that actually, I want to be a limited company because I've heard that's good. And my significant other I share household income with is also going to do some work for the business. So we might have a scenario where we're paid some wages or some dividends to both of us. And that means that if we were getting near, say, a £50,000-ish limit where you start paying big tax, then actually you might be able to reduce that or not pay it at all if you could split that between two different allowances. There's lots of things you can do to control who and when and how you're taxed. So limited companies being one, partnerships being another. You can adjust the partner split to use somebody else's allowance. And there's a lot of these things that can be done, and they're not illegal. There's nothing wrong with it. It's just using your brain and thinking, okay, well, and expertise, and thinking, well, what's the best way to structure this? And on top of that, even as a self-employed person, say you're just a freelancer, you're not looking to split the income with anybody or do any of these other slightly more complex things. You're just thinking, well, I'm getting near 50,000, say, and I know my profits are going to be over 50,000. I'm going to start to hit, at the time recording, 40% tax. You might decide, if you did your tax return on what's known as the cash basis, which a lot of people do in their own tax return do, they declare what they add in and what they paid out for business purposes, and that forms their profits they're taxed on. You could just not receive some money, ask not to be paid till after April. That's a possibility. Or you could bring forward some expenditure and pay that to bring the profits down. That's not possible for an employed person, so that's quite a big advantage. If you're on the more traditional basis, and it's based on what you invoiced and work you carried out, and it's all kind of based on dates, they call it the accruals basis, then actually what would happen there is that you might decide you're not going to take on any projects for April and actually just going to start them again in the new April, and that, because of the tax, you might work that out as better. I'm not a big fan of delaying work or not taking on more work. I don't think it's great, but some people are at those margins where it really does make sense for them. But you're in control of that. Again, an employed person is not. If they get a bonus, we see it through some of our employer clients who are paying their teams bonuses. They might pay them a £5,000 bonus, but that means they're going to pay a huge chunk of NI on that month that it's paid, because that's the way that kind of national insurance works. It comes off in 1 month, and potentially a bit more tax. The tax will even itself out over the year, so that's not as big, but the national insurance is a problem, and they can't control any of that. There's no way of reducing it or splitting it. It just goes in and they get taxed. So for you, it's a really big sort of tax efficient thing that's possible, that choosing of it. And when you stack up all the rates, I started off telling you at the beginning, 2% difference doesn't sound very exciting. It is, I think, when you're a number cruncher like we are, it's exciting. But if you factor in all these other things that are possible, you can really make quite a distance between the actual tax result of somebody who's self-employed and somebody who's employed. And again, there's nothing illegal about that. It's just the way the system's structured. And for me, I always think, well, it offsets the fact that there is this up and down income and all the risks and the job creation that person might be doing and everything else. I think that there's a nice feel to that self-employed tax does end up being relatively efficient versus an employed person's kind of secure job. But you could argue that one all day long. But for you as a self-employed owner, just know, these benefits are there. And when you're feeling sad and you're feeling like, this isn't going very well, just remember, at least you're tax efficient. Or if you're not feeling tax efficient, maybe seek some advice and just check that you actually are. So there we go. Good news all round for the self-employed.